Welcome to the Salty Investors. Today is October the 6th, and how are you, Tim?
Yeah, I'm great. How are you going?
Not too bad, not too bad. But as is custom, we should start off with the salt for the week. So, what are you feeling salty about?
Well, Investing with Tom just did this video on Buffett buying Apple in 2016 for $28, split adjusted, and yeah, it's gone up a little bit since then. It's now a
Just a little
five
bit.
bagger. Yeah, $150. And I'm a little bit salty about that because I thought I was a big know-it-all, and I thought it was another BlackBerry. They weren't releasing their iPhone sale, so that looked a bit sus.
Uh,
And but they've transitioned now into more of a platform type company, and yeah, they can charge 30% on all their all their sales done inside their shop. And
yeah.
FTC didn't stop them at all, or all those guys just let them do it. Yeah, and to add insult to injury, in 2019, I decided not to get into Berkshire because they own too much Apple. So double down on the stupid saltiness
Jesus.
there.
You got to let
How
it
about
go,
you?
Tim. You got to let it go. You know, got to become a Buddhist. Just let that stuff wash over you. Me, I'll tell you what I'm salty about. I'm salty about this growing chorus of the central banks have gone mad, and they all need to stop. And so the Wall Street Journal had an article where the United Nations is now telling the Fed
Oh,
to stop raising rates. The United Nations, who are they? So it's within the United Nations. There's something called the United Nations Conference on Trade and Development, UNCTAD, if you're into acronyms. It's a good one. So yeah, they just think that this is the bit that gets my goat, is that they said they estimated that every percentage point rise in the Fed's interest rate lowers economic output in other rich countries by 0.5% and economic output in poor countries by 0.8% over the subsequent 3 years. Now, this is the same United Nations that wants to impoverish developing nations by not allowing them to develop in the same manner as we did because climate change. So that's my salt for the week. United Nations, be quiet, we don't care.
think of the children, Scott. Come on.
Won't somebody think of the children? Jesus. How many times?
Yeah.
So that's the salt for the week. Let's move on to developments in Australia on Tuesday. Now, I've seen headlines that said that Phil Lowe is now, like, he's the man responsible for the global rally in stock prices in the last sort of 2 or 3 days. Anyway, but did Blinky Bill feature in your childhood, Tim? Is it a childhood memory or not really?
Didn't really have TV, so not
There you
really.
go. Well, you brought up. What were you brought up like a Quaker or something? Were you? Is that what you?
Yeah, very close to it. So missed out on the
um,
benefits of Blinky Bill there. Yeah.
yeah. Well, do you remember? Or what, you more of a Humphrey B. Bear man? Were you? Something.
Yeah, yeah. What was the other? Fat Cat was the other guy, wasn't he?
Fat Cat. Yeah. Well, see, I mean, the problem with those two, of course, was that it took 20 years for the censors to realise that Humphrey B. Bear wasn't wearing any pants, which is weird. Which is weird when you think about it, because I mean, he's a bear, and bears don't wear pants. But they didn't think the fact that Humphrey B. Bear wore a waistcoat and a hat. They didn't think that was weird. They thought the fact that he wasn't wearing pants was weird. So they took him off the air. Well, at least that's the story I was told. But anyway, Blinky Bill, yeah, koala cartoon character. But I think that my question to you today, Tim, is do we have Blinky Phil? Because Phil on Tuesday blinked and market was expecting 50 basis points increase to the cash rate. He went 25. 21 out of 28 economists surveyed thought they were going 50. So that's about par for economists, because we know how good they are at predicting the future. But did Phil blink? Is this a blink? Is it a half blink? What's going on, Tim?
Oh, I don't know. I think he's backing himself into a corner here. Like, if inflation goes higher over the next few months,
Yeah.
well, he can't look like he's going to do another 50. It's just going to
Mm.
make him look bad. So I don't know. I
Mm.
think he should have gone the 50. You can always roll it back later.
Yeah.
But everyone's complaining. I just hope he's not listening to the market and listening to others. He's actually trying to do the right thing here. So we'll have to wait and see. But what do you think?
It's a look. The minutes sort of say it's a wait and see attitude. I mean, we did say in the last podcast actually that the minutes they did discuss going 25 or 50. So I don't think it's a huge surprise that he went 25, and he can sit here and say, well, we're going to wait and see because, you know, there's a lag in monetary policy. We don't know the effects, but these are just a couple of paragraphs I cut from the statement. I think a lot of it had to do with this, that first line there, one source of uncertainty is the outlook for the global economy. So they're watching things overseas. They're watching, you know, like what's happened in the UK recently. And, you know, they go and they just reiterate the same old stuff, which is, we're data dependent basically, and we'll wait for interest rate, the effects of monetary policy to be felt. So did he do the right thing? I have no idea. I don't have a crystal ball. I mean, a lot of market commentators are saying that they've gone too far already. It's weird when you're at 2 point, what are we now, 2.6. I mean, they're going to crash the economy or something. I don't know if he's gone too far. I think it's a half blink. I give it a half blink. That's what I'd say. Half blink. Yeah, and we'll see. I've got a few US dollars, so we'll see what Powell does next meeting. But if he keeps the foot on the pedal, then those US dollars just look even better and better as an investment, don't they?
Yep.
Yeah. But I mean, I guess the story. Go ahead.
I don't know if these two are talking. Are they talking? Is the Fed gonna not go as high? Next meeting.
Maybe.
I got suspicions they are talking, and I think the market's thinking the Fed could do it 25 as well. Surprise everybody.
Well, even if the Fed did 50, that would be a climb down from 75.
Oh,
yeah, and you've seen markets sort of price this in now. It's priced this pivot in. Seems like everything's back off to the races. It's time to buy ARK and buy calls on the NASDAQ or something. I don't know. I haven't done that, just so people don't misunderstand me. But that seems to be the consensus in markets. I think the Aussie markets are 5% in 2 days. This is one economist, Shane Oliver. He's been part of the furniture at AMP for about 30 years or so. Now I put Shane Oliver. I haven't read this article, and I'm not going to, but I just want to put this up there because in 2007, at the end of 2007, Shane Oliver was forecasting that the RBA was going to raise rates and that the ASX was going to go up another 10%. What happened? The ASX got cut in half and rates got cut to initially about 2.5 or something like that. So this is a guy who spent his whole life in economics, and he missed the single biggest economic event of his lifetime. That's why he's there. He's there for me to ridicule him and say, don't pay too much attention to these people. Moving on, though, this idea that inflation has in fact peaked and it's going to be starting to come down. This is just one data point I picked up. The cost of shipping containers falling through the floor. There's a whole other bunch of things that showing that commodity prices, for example, coming down. Inflation speaks. So maybe the RBA's got it right. I mean, occasionally they have to get it right, don't they? I mean, they're wrong that much that you'd think occasionally, like a broken clock, they're going to get something right.
Twice.
I just don't know. We probably should put our biases on the table. I think I can speak for you when I say that you and I would prefer lower asset prices so that we can buy bargains, and that we wouldn't mind future RBA hikes. And so that's our bias on the table. You agree with that? Yeah. So I think, but you've got to deal with what's coming in. You don't always get what you like, and in fact, most of the time you don't get what you like with markets. So you've just got to play the hand you dealt.
That's right.
Yeah. So I think the problem is that if inflation has peaked and is coming down. Does it come down in a sort of a straight linear fashion so that we're at 3% by next Christmas, or and it's back off to the races again? The RBA's forecast, which is not worth anything because they have no idea. They say 7% this year, 4% next year, and sort of back to the target range in 2024. Who knows? But all interesting.
Yeah, it is. Looks like they're getting a soft landing currently. Like everything's looking at. So
yeah.
But you look at all the commodity prices, and they're trying to hike oil again now. I see they're trying to cut how many barrels they're going to release, and so
trying to cut. I don't know. Did you say cut?
Yeah, I saw someone saying they might be looking at cutting barrels. So I don't know.
Right.
Yeah. A heap of things are falling, like commodity, even copper. Copper is falling. So when you look at things like copper, you're thinking, wow, like things are slowing down a fair bit. And I've got a few slides later on. We'll talk about. I'm going to get my crystal ball out and see how it goes. So,
I think. I mean, yeah. How much demand destruction is going to occur to bring these, and is going to be reflected in commodity prices? So, I mean, I think oil. If you look at the amount of oil infrastructure that's been built lately, like I think oil only has one way to go. Once we get through this, if there's a recession, if there's a global recession, let's say oil gets to $20 or $30 a barrel or something, I mean, it's got to be the buy of a lifetime, doesn't it? After that,
yep.
I mean, it's just if you can pick the bottom in oil, it's going to be a great trade.
Well, no one's going to invest in it to re-drill, and everyone's looking too far ahead. Electric, that's going to take a decade to build out. So is that whole decade we're going to be sitting there with needing oil and no one's investing in it?
Well, yeah, exactly. Yeah. Well, let's move on. Friend of the show, Stanley Druckenmiller, he's dropped in again for a quote, and this quote went nicely with last week's podcast, actually, with some of the charts that you threw in about long-term returns and how we can have long periods of like flat returns, negative returns, 10, 20 years. And he's sort of saying this thing, I'm bearish, but I'm bullish for the long term. I think what he was doing was he was commenting on people who are saying this exact sort of thing, like, oh, I'm bearish right now, but I'm bullish long term. And he said, look, you can have 15, 20 years, 10 years where the market doesn't go anywhere. And that at the end of that, he said, we've had a hurricane behind us for 30 or 40 years and it's reversing. Yep. And my central forecast is that the Dow won't be much higher in 10 years' time. And that's that sounds maybe a crazy statement to some people, but think about, I mean, I don't know what the Dow level was, but the S&P was 1,500, over 1,500 in March of 2000. And in March of 2009, it was 666,
Yep.
These periods have happened in our lifetime, not just, it's not some relic of the past. You don't have to go back to 66 to 82 or 1929 to 1954 to find these periods. They're in our recent history. And given where valuations got to, and still are quite elevated in the US at least, a flat decade is not out of the question.
Well, it drops so suddenly, and it takes years and years to regain those highs. So I don't know about a decade, I think, but it could happen, high PEs and cyclically adjusted PEs are pretty crazy as well. So I don't know. We'll have to wait and see. I've got a few slides where I think it's not going to go like that, just because I think they're going to print. I think they're just going to print money, which is then going to, because what else they got in the toolkit here? Nothing. So that's the only thing that can keep the economy going. So
So here you've got a chart of the VIX volatility index. What's going on here, Tim?
So obviously I like Double Line, Gunlatch, his team over there. They're pretty bond people, So if you're looking for people who, not as crazy, into some pretty solid stuff. And they've got this chart here where they're showing, when the VIX gets over 40, like the question I'm asking myself is, when do you actually buy? Like, everyone talks about, when the S&P 500 gets to 3,400 or 3,000, I'll buy. But it's just all talk, people. And then once it gets there, they'll go, once it gets down to, 2,500, I'll start buying.
Yeah. Find another reason to not buy it. Because at those times, it's easy to find those reasons, isn't it?
Yeah. So if you haven't done the work beforehand, it's very hard to buy. And you need to be, thinking about this in calmer times to think, okay, well, when will you actually buy? You've actually got to, take some action. And so this is what their team's done. They're going, well, the VIX, volatility, I don't think is actually means risk, so I'm a bit different to the, the normal market people here. But you can see here, when it gets over 40, looks like a great time to buy all these times, except for 2008, which it went, a little bit higher. Yeah. So you look at all those periods there, if you, bought a tranche at each of those times, holy hell, you'd be, margin of safety, whatever you went into, you'd be, you got your margin of safety there to, as long as you can hold out past that 6 months, So I'm thinking I'll put a watch, to email me and SMS me when it gets to that 40, and I will have a go. I'm not sure what. So I'll be doing a bit of bottom bashing, which we'll talk about in the next slide. But
what do you think where are we now on VIX?
We're in the 30s. So
in the 30s.
30s, and sometimes every now and then jumps up to 35.
Yeah.
So we're in the ballpark. But as you can see here, sometimes it just touches that 40.
Yeah.
So, and then it comes back quite quickly.
Maybe it's time to get ready to buy some VIX puts.
Yeah, well, if you're into that sort of stuff, you could play this a few ways, obviously, but I'm trying to think, I'm not that smart. So all I can do is try buy somewhere near the bottom, and this is how I'm trying to do this without, trying to think I'm smart enough to time the bottom. So, and I've got capital to allocate. So, I'm pretty happy to, and I'm hoping we get multiple compression as well. That's the other side that I'm looking for. Everyone moving to value. And I think it'll switch back, once the printers come back on. So I'm hoping to pick up, a double gain here, buy at the bottom because everyone's hating the high multiples. And then, buy high. So they'll get, a huge return, hopefully. But I don't know. That's my thinking. What are you sort of thinking? Where are you going to start buying?
So I think the problem is that the stock prices can come down before, the earnings is going to, I expect earnings to come down next year, right? From where they are, current estimates. So the multiple compression happens later and the stocks get discounted before that, right? So it's not like nothing aligns perfectly, like you're going to get the multiple compression in the bottom of the market at the exact same time. And then it's, it was 8. The PE multiple was 8 in 1982. And it was like, that's the signal. It's like, but an individual, who cares what the market PE is individual stocks don't all bottom at the same time. A lot of stocks, good quality stocks, bottomed in October of 2008 before, we didn't get a bottom until 6 months later. It's 5 months later, an actual bottom. That's not a bad indicator. Like you said, you're kidding yourself if you can think you're going to bottom tick the market. So, why not? I guess if it's helping you stay disciplined, so that you don't come up with more reasons not to buy. You're like, right, I'm going to buy. Doesn't matter. I don't care if World War III started and nukes are flying. Maybe that's an exception. I'm going to buy because the VIX won't be at 40 then. The VIX will be at 400.
I know. Famous last words. I poured in at the VIX at 40, but get wiped out.
Yeah. Tim bought at 40 when it was on its way to 400. Yeah.
Yeah.
No, not bad. So you threw this up. What looks interesting? Are these what look? This is what looks interesting to you?
Yeah,
Copper.
this is not quality. This is just like what's going to really, you know, if the economy, we hit a recession here that's, a little bit more extreme than a garden variety,
Yeah.
what's going to really hurt.
Yeah.
So I think anything that's got loans attached to it, cars and housing, obviously they're going to hurt. You know, but the banks, I think, maybe, but I just don't know them. I can't value them, so I've got no idea how to do them. But used cars and
On banks, you'd
organic.
have to say that, like, if housing's your worry, Canada, US is not going to be the canary in the coal mine, right? It's going to be Canada and Australia, and maybe
Yep.
New Zealand, as well, because that's where the bubbles are. They didn't really pop in 2008, right? So I mean, yeah, I mean, you should be having a look at who the banks have weird reporting year ends. I think it's September's, so they'll probably report this month. That'll be NAB, ANZ, and maybe Westpac. Commonwealth banks are June 30, so they've already reported for the year. But you want to just have a look at, are their loan provisions going up? The provision for doubtful debts going up? Are they provisioning more? And what's their commentary around that? Maybe. I would have thought banks in the US are okay. I mean, banks in Europe, I'm sort of very nervous in saying this, but banks in Europe are better capitalized than they were. We should say that moral hazard has been institutionalized really across the banking sector, across the world, really. I mean, moral hazard, people were talking about that all the time. No one even mentions it anymore because it's just baked into the system. In Australia, $250,000 deposits are guaranteed by the government. Same around most of the world. So, yeah, there's if there's another banking crisis, it's suffice to say it will end up on the public balance sheet. But I think the banks are better capitalised in the UK, in Europe than they were. I don't know what's going on with Credit Suisse. That looks, that chart looks horrible. But yeah. Touch wood, because I'm sure there were plenty of people in 2007, 2008 saying, "Oh, the banks are fine. Don't worry about them. All their books are offset. Yep. Don't worry. Their derivative exposure, it's all offset. And we know that all came undone." But go ahead.
And they've been around for a couple of 100 years. Obviously they can handle the weather. I don't know how many times I was told that. But yeah, obviously.
I mean, I'm really this. I'm interested to see how much demand destruction there is, because I think there's got to be another commodity super cycle in this. The underinvestment in traditional sources of energy seems to me like a no-brainer. Like LNG, like I'd be adding sort of maybe Woodside Petroleum to that list, or maybe even Santos, to the resource names. Another thing I've been looking at that, I don't know if you remember, probably 3 years ago now. Remember cannabis? There was this big boom in cannabis, and some of the stocks. Yep. I think there's a stock on the ASX called Elixinol. I think they were basically selling CBD oil and other things. I think the stock went from 25 cents to about $5. It's now 2.5 cents. I'm not interested in Elixinol. I'm not going to buy it. I think it's one of the losers. But I want to look at sectors like that have just been everybody's disgusted by, peak disgust from it, and just try and go through that sector and see what.
But how are you going to buy them? Like, they've got no cash flow, and how are you going to value it? How are you going to do it? Like, what are you going to do?
I had a look at is it CAN the other day? Ticker CAN. Now they've got. I mean, they don't have positive cash flow and they're losing money still, but they are growing their revenues. But they spent a lot of money building facilities and whatnot, but I think there's, I want to see more. I'm not saying I'm dipping in there yet. I think it's too early for that, for cannabis. But and I'm not necessarily cannabis, but just out of favor sectors, things that have been forgotten about. Oh, that was a craze and it's over. But there will be something will emerge there, I think.
Yep.
As it always does. Talk about why you've got Home Depot and NVR up there. Why have you got them there?
Home Depot, it basically can't be overtaken by Amazon. So you're not going to have paint and planks of wood and carpet sold on Amazon.
Are you sure? Are you sure? It's going to be drones. Drones are going to deliver planks of wood to work sites, and
I don't know, but like it just seems like a hard ask, for the logistics side. So that's why I think a bit of a crash there. Might have something there. NVR, it's just like a franchise type. Oh, it's a very light, capital light home builder.
Right.
So they don't actually own any of the properties or anything like that.
Right.
So they're not exposed to it. So when the market crashes, they'll just get lumped in with all the other home builders.
Okay.
And then so you've got like a thing that the market isn't properly pricing. So hopefully you can pick up this compounder, which has been, I think it's 1,000 bag or 100 bag or something like that over. So there's one of these compounders that, So that's the one I'm going to go. And Trex is like a flooring company, so laminate. So I don't know. I think they're pretty good options. I just hope they get, pulled in by the rest of the market as it sees, trying to implode the housing market a little bit.
Guilt by association.
Yes. And especially in these ETFs. So they're all passive. So people go, I'm going to short a whole heap of housing ETFs. These guys get called up in it. And they'll be dragged down with them. And then I'm thinking, hey, I'm going to, go against the tide here a little bit. And hopefully I can go against the tide for 6 months or, a year or two. I don't mind. And pick up some these long-term compounders that I think have got moats that I can't see anybody breaking. So, that's all.
When you say, so NVR, it's a home builder, but it doesn't buy land.
Yes.
But they must have, or do they just subcontract it out to do they have material stock, like lumber, and do they sitting on that, or they don't do that either?
Material they are for a little bit, but it's only until the project is completed and then it's folded over. But what most home builders do, they buy the land and then they develop it and then they go on. So if you get stuck, if the market, the housing market's going up, it's a great industry to be in. Yeah. But if you're going in the opposite direction, you're stuck with all this land that you bought at a higher price that you can't find a buyer for. And so everything gets written down off the balance sheet and it looks just horrendous. And you don't know how long that's going to last. You could last, 5 years. So.
And you've contracted to build homes at a certain price, and now you can't build them at that price because you had commodity inflation in lumber and all kinds of things. And you can still build the house, but you have to build it at a loss. And we've seen that here in Australia. They've been walking away from contracts. Some builders.
Yeah. So all I'm just hoping everybody doesn't listen to this and don't look at NVR too closely. And stuff up my ideas here. Norbert Liu is the guy that I like. I think he's the best investor in the world. Because he doesn't buy anything, and he just sits there and and he invested early in NVR. He doesn't own it currently, but he saw it super early and he saw this model and he's like, wow, this is just insane. And it was priced the same as other home builders. And he's going, there's no way it shouldn't be. It should be a way higher multiple because they're not taking any of the risk. But I'm just hoping it gets, called up in this next lot. And but I don't know. People might see through it this time, second time around.
How much is it down? Is it down? Has it been down much in this market?
Yeah. It's down. Like it on my DCF is like flashing, tell me buy it now. It's like half price at the moment. And I'm going, no, it's going to get way worse. I said the VIX 40 thing, I'm going to,
NVR's
hold off
first
here.
off the block. Yeah.
Yeah. And this is going to be, people are already discounting it now, but I think it's going to, possibly halve from here, So when you start looking at that and then you look at the long-term discounted cash flow over 10 years, you're thinking, wow, it's something that I could hold on for the long time here and really clean up. So that doesn't do a dividend or anything like that. So, I've got to pick it a little bit. If I get it wrong, I'm going to get nothing for, 3-5 years. And it might be a little bit nasty for me. So just have to wait, be patient. It might not happen. I'm fine with that now. So I've got FOMO. That's what I was worried about before. I'm forcing myself to go and buy stuff because I had FOMO. So
well, you don't have to swing at every pitch, although you do have to have a swing every now and then. Though. That's the problem. That's what you have to remember in the bear market. Have your shopping list ready, and you got to take a couple of swings at least. What do you want to say about organic food, farmers markets?
Oh, well, Amazon, purchased Whole Foods. Yeah, they purchased Whole Foods. So that was the one I was going to buy. So I was waiting for a correction because if you look at 08, like holy hell, that whole company just got destroyed. Like because everyone's just gone, they're not going to be buying. People aren't going to be buying premium food. They're all going to go back to your normal supermarket. So the whole thing just fell through the floor. Like, and it was just cents on the dollar. You could pick this thing up, and then when they turn the money printers back on, everyone feels rich again. The house has gone up in value. You're earning a little bit more, and and so this is these ones. If you can pick up the swing here, because it's going to swing low. Like these things are going to look horrendous. Like they're going to be like, you don't go near this stuff. You'd be, you have nightmares at night trying to think, have I bought the bottom of this thing? It could halve again. This is the sort of thing that's going to happen to it. So, but I think they'll come back. Because I don't see central banks. They haven't got a magic wand here. All they can do is print money. So they're going to keep up the charade, for so long, and then they're just going to go, well, let's turn it back on.
It's all we know. That's the only tool they have. It's a blunt instrument, and they'll turn it back on. Yeah, I'm with you. I don't. I mean, I'd like to believe that we're going back into another environment where central banks, even if they don't say it out loud, go, that zero interest rates for a decade thing. Yeah, probably a mistake. Let's not do that again. I wish that was the case. There was some structural change. I think the only thing that would keep them in that mindset is if inflation stays persistently high, that supply chains, because there's I don't buy this whole idea that we're deglobalizing, but if onshoring is going to happen, that's just going to stay dislocated for a couple of years. But otherwise, if the shit hits the proverbial, then print.
Yep.
Yeah.
I'm not in these doomsday people think, this is the last hurrah. I think we've got a few more left. We've got yield curve control. We haven't done that really. I know other countries have, but the US could do that for a decade or so and kick the can down the road for another decade. And So,
well, look at Japan. How many people have died on the altar of shorting JGBs? Over the last 25 years.
Yeah, I'm not doing that. What I think and I hope would happen. People would, be a bit more fiscally responsible. I just don't think it's going to happen. And monetary policy being reasonable, but I just can't see it happening in my lifetime. It'd have to, burn to the ground before they change path. I'm afraid.
Yeah, I think we're in agreement there. I think you've spoken about used cars before, actually, last podcast.
So this is a company, Copart, that basically just it's another 100 bagger possibly. That light capital model who just sell to other used cars and banks and stuff, they handle all the software. So they don't actually buy the cars.
Okay.
So they handle the auction software that runs it all.
I see. Right. So they're just like a carsales.com or something like that.
Yeah. So it's sort of like a middleman like Amazon. They own the platform. And it's very hard for the banks to go, oh, yeah, I'm going to use anything else, you know?
Yeah.
So I think that's going to look terrible. It's all going to get pulled down with everything else. But then if you can hold on for...
Yeah. So it's the Zillow of used cars, basically.
Yes. Yeah. So, I don't know. I have to wait and see. Could be a few dumb ideas in here, but you know, spread the bets out a little bit. Yeah, hopefully they don't all blow up in my face. So
yeah. Okay. So this chart you've put up here, we have. Oh, this is from Fred.
Yep.
So you got CPI with amount of currency. Is this M1? What is it? This is
M0 is like
M0.
the old sort of like it's like actual notes and coins. So like I don't like M2 and things like this because people look at these huge increases M2. Surely that's going to lead to inflation. And they got no freaking idea because half of that's locked up in banks and all these things that normal people don't understand. But currency, I think that might have a high correlation towards CPI because it's actual money that people have got out and they're properly got intent to purchase with it, So I think that's, so as you can see from the slope of both lines from, 08, 09, they're fairly similar. And, that's given us about 1% to 2% inflation or, CPI. And you see what happened in, March 2020 that, amount of currency they're printing, minted, basically just went through the roof. And you can see, but CPI didn't really do much, it took 12 months before it. Yep. Yeah. So it's got a lag effect here. And then they kept on printing more for the next year from, to March 2022, this year. And then they've basically, it's gone sideways, hasn't done anything. So I think it's a 12-month lag or, 10 to 12, 10 to 14 sort of month lag here from when you mint money, coins and notes to get the inflation. And so if you take that, March this year, 2022, that's March 2023, when we should see inflation,
roll over,
bottom out, flatten out, it would decrease maybe, a fair bit. So I don't know, I want to be a bit more adventurous and come out with some numbers and actually, have a punt at some of this stuff. What do you think?
I mean, as always with charts like this, is it correlation and causation here? Is there any, I don't know. So that's CPI less food and energy as well, isn't it? Yeah.
Well, I picked that because you got Ukraine.
Yeah.
And food is linked to energy. Like if you think that you can have food without diesel being burnt, I don't think you understand how the agriculture system works. But so I think, if we put in fuel and energy in food, I think it'll be different. But I'm trying to just find out, things that we can control, like money printing, and we can control. The Ukraine war, I think we've got less control over.
No, I mean it's an interesting chart. I mean, it's pretty obvious to see that commodity prices have already rolled off. There is that issue we brought up before about owner's equivalent rent portion of US CPI, which, because of the lagging nature of that, will stay elevated through the end of this year at least, and maybe help to keep the numbers up. And again, does the market look through that and say, well, that's old news, those rent increases have happened? Not sure. But interesting chart.
And if you look in the and past it, high inflation environments, everyone's saying, "Oh, wait, we want to see the Fed pivot." The market actually rallied when inflation was seen to be beaten. It was, so when the market saw that inflation was, back to normal territory, the market rallied, and that happened before the Fed pivoted. The Fed's always late, and we know this. The Fed's always behind. So the market, if you want to catch before the market goes off, you want to know when the inflation numbers are going to roll off, and be level again. So
I guess the problem is if I forget who said this, but inflation of this sort of magnitude has never been abated until you had positive real rates. Okay. So you have to get the Fed funds above inflation. Now that can happen in two ways. You can do what Volcker did, just keep raising, or if inflation is coming down, then at some point the two meet. Your Fed funds is even if Powell goes to 25-point increments and inflation keeps coming down, and they meet somewhere 5 or something, and then you have positive rates. So I guess that the problem is that you have 1970s again, where they raised rates and then they backed off, and then inflation came back again, and that's you have this stop-start. You're going to have all these false starts, aren't you? False dawns that you got the all clear. I'm not, but at some point you do have to hold your nose and buy something.
And that's what I'm thinking. That's what my numbers have come up. So I don't know. Trying to actually give people, what I think, is, instead of just going, "Oh, we'll just see what happens," try to actually put some numbers on some stuff and, give my opinion. So that's what I'm looking at the moment. It might change, but so I'm not into this rally at the moment. So that's what that comes down to. So I'm not saying, "Hey, we've beaten inflation, the Fed's going to pivot, blah, blah, blah." I'm thinking we've got a bit more pain here to endure, and I think that early next year, we might get something. So
the last couple of days has been a sugar hit. Look, the RBA's pivoted or pivoting, or at least slowing their rates of increases. The Fed, who knows what the Fed's going to do? Is Powell going to keep his foot on it? But this is the anticipation, isn't it? It's building that they're going to at least slow down their rate of increases. But they're still, are they going to continue with QT? Are they going to put that off? I mean, imagine if the Fed came out and said, "Look, we're only going to go 50 and we're going to postpone QT," or we're going to be, whatever. The markets would just rip higher. It's a tough one. But you've still got. So there's obviously been some demand destruction already. It just depends how much. If everything, you can see a narrative where if central banks basically go, "We're done," things can turn around real quick, and we avoid a recession and off to the races again, and it's another decade of zero rates and fantastic returns on stocks. I know it's just too hard to see around the corner. But thanks for trying. Thanks for trying. So this is another stock you bought this week. It's called.
No, I haven't bought this one. This is this auto auctioning company that we just talked about a little bit before.
Yeah, sorry, I didn't mean that you'd bought it. I meant that you've brought it to the podcast. Yeah, sorry. Yeah.
Yeah. So as you can see, price to cash flows pretty good. Invested capitals in the mid-20s.
Yeah.
Gross margins are a little bit low, for some crazy company, but look at the operating margins, they're pretty close to the gross margins. So it shows they're keeping a fair bit of it for themselves. So I don't know. This is one of the ones that I said is that guy that wrote that 100 Baggers book. This is what he likes. So I think it'll be caught up in the crash. I think other people will just see it as a car company, a car finance company type thing, which will be, so it'll be in the fire sale type category. And I'm thinking, no, the market is, throwing everybody out here with the bathwater. And this is the baby that I'm, maybe want to keep out of that bunch,
So the multiples had a third sliced off it already, 37 to 24.
Yeah. So the market is looking ahead. The market's looking 6 months ahead, and they're thinking, they're a recession next year, and this will be hurt. But remember, this is just an auction site, so there'll be, when heaps of cars are going to get sold, they still collect money off that. They don't, even if the cars are going for less value, they still collect a percentage.
They still get a clip. And
if there's lots of cars being sold, they actually will do well because there's lots of cars being sold. So the only thing is the moat. Will the moat be taken over by an innovator, which is always a problem. Like you can't predict that these days. So, but if you're thinking, great price, you got that margin of safety, Seth Carman, you grab that, but then you got a potential of a multi-bagger here. Well, you're getting the best of both worlds. You're getting the value world plus the the growth world all in one hit. This is the ideal scenario that
it's the dream. It's the dream.
Yes. I can keep my value ways, the cheapness of me, but that get some growth, and I don't know. We'll have to wait and see.
Yeah. Okay. Well, as threatened, I've bought a micro cap to now. This is not in the same class as stocks that we've discussed in the past. It is not a compounder. There's nothing to compound yet. These numbers are courtesy of a little firm called Research as a Service. They specialize in research on microcaps. And full disclosure, I know the woman who owns this company and who runs it and who is one of the analysts, and she is the analyst for this particular stock. I worked with her over 20 years ago. So when we were at BNP Equities in the research department there. And there's another analyst at Research as a Service who I know as well. He was the retail analyst back then at BNP, and he does some stocks for these guys as well. So I know, full disclosure, I know some people there, but I've been long a fan of, I think this space, the reason why I look in this space is because I think it's undercovered. There just isn't, major brokers don't cover these stocks because they're too small. I think this stock is maybe it's less than 150 mil market cap, Australian. Yeah. So what do? Pointera is, so they're basically a 3D analytics company. Now, instead, and they work with large utilities, mining companies. They work with surveyors, people who are going out with, say, cars, driving them around, LiDAR, that kind of data, driving cars around, drones, aerial, planes. And they're taking that data and trying to interpret it. So it's not just about capturing the data. This company's not flying drones. They're not driving cars around. They're taking that data for clients. And as they've found, it's not just about the data. It's about getting answers out of that data to questions, And so the problem has been that large companies pay 20, 30, 40, $50 million to get this data, and then they have to find someone who can actually interpret it for them and spit out useful answers. And there's a big lag in between that, like the timeliness of that data. So like the CEO, from what because there's quite a few interviews of him on the Research as a Service website. He keeps emphasizing this idea that people don't actually want the data. They want it synthesized. They want answers out of it. And this is what they specialize in, basically. And so they backdoor listed through another company in 2016. There's basically no worthwhile financials there. In 2017, I think their revenue, I don't even think they had any. 2018, they had a little bit, but I think they got more money from government grants. 2019, they weren't making much in terms of revenue. The slide I've got up here starts at 2020. You can see, forget that annual contract value. I'm over on the far left-hand side.
Yep.
Just have a look at sales revenue. 1.2 mil, 2021, 4, 2022, 9.7. And then I wouldn't pay any attention to the forecasts. I mean, I've no idea if they're any good. But on the right-hand side, you can see it by half. The reason I think this is useful is because if you look at the second half, they did twice as much revenue as the first half, and they actually had positive EBITDA.
Oh wow!
Profit. So they're not cash flow positive yet, but they're right on that cusp. Yeah, they're right on that cusp. In my experience of looking at these small caps, these long duration companies that are sort of investing and growing their top line, but none of it ever seems to fall through with a lot of them.
Yeah.
They're right on the cusp. And of course, they're going to be spending more money building out sales teams and whatnot. But I think they are very committed to tight capital management. They had Bevan Slattery, who people might remember from, he was Steve Baxter's partner in crime at Pipe Networks. He went on to that's Bevan, he went on to found Superloop, I think, which is still around. Yeah, but he tipped in 2.5 million. Of course, I think he got his shares at 5 cents. The stock is 21. It's been as high as, like everything else, has got slammed. I think was as high as 60 or 80 cents or something like that at some point. So it's been slammed. But yeah, I just think it's one of those ones that on my radar, I don't own it. I'm thinking about dipping in, just take a small position because I think, that it's got a lot of potential. The addressable market here is huge. It's in billions of dollars. It's ridiculous the amount of money that companies are spending on data and trying to synthesize that data and analyze that data and get it in something useful, some useful format. So yeah, that's just one I thought I would bring up. I know I don't see forecasts. I have no idea if they seem pretty aggressive by the looks of them. They have them going from basically losing money this year to making a $7 million profit next year. Now, I run my own valuations. I can tell you that I ran a valuation where I've got them making $2 million next year and $5 million the year after, not 19, and I still get a price of about 80 cents. That's my valuation on it.
So when are you going to pull the trigger on this? And what's going to be the catalyst here? Like, you're going to wait, or what do you think?
I don't have one. In fact, I wouldn't be surprised if I pull the trigger on this in the next couple of weeks.
Oh wow! Because
the stock has been around 20 cents for 6 months. Doesn't seem to be going anywhere. Haven't checked. It's probably gone to 25 cents today. I don't know because I haven't checked what it is today. But yeah, I think I'll probably be pulling the trigger on this pretty soon. I would say. But as usual, this is not investment advice. Do your own research. I have no idea what I'm doing. But yeah, I just thought it's an interesting. I don't think it's a counterpoint to what you brought, but it's a different style of investing because you're finding things that have proven track records of being compounders. I'm trying to find an incipient compounder, something that may do that over time.
Yeah, it'd be interesting to see. Like they can always burn more cash in the future, but if they're getting those revenue numbers up, it doesn't matter if they burn cash. You'd like them to invest. Like that's what you want.
Yeah, well,
companies that can reinvest, but they can get a higher return on capital. I've got no problem with them burning cash. It's just are they investing in stuff that's actually going to give you more bang later?
Yeah, well, I think when I've looked, I'm not going to mention any names, but similar platforms, well, not some, similar models like SaaS platform, long duration assets that are, yes, we're burning cash and growing our revenues, but don't seem to get any closer to bottom line profits or even positive cash flow. And I think these guys are close. Now, I guess they can make the decision to just say, oh, look, we're just going to run the business as so we don't need more capital and break even and just spend everything we get on, building out sales and product development, everything else. But I mean, if they hit the kind of numbers that are forecast here, I mean, they're going to be getting it in quicker than they can spend it.
Yep.
So I like I said, I don't even need the numbers here to be half as good as Research as a Service has them for me to like it.
Mm-hmm. Yeah, it's definitely interesting. Yeah. Oh, check back in 6 months and see where it's gone, I suppose. But
it might be 10 cents. Might be 10 cents. I think it's.
Yep. The only thing I'd say is like management. If you got to know the management and see what type of people these are, are they allocators? Are they really good at allocating capital? This could be a multi-bagger. Like you get 100-bagger on this thing.
What from what I gathered, and I've only seen sort of the publicly available interviews with the CEO, and I think what's good about him, he does do a lot of. They do regular updates. They don't keep shareholders in the dark. They are constantly talking about it, and of course they're not because they're not profitable or cash flow positive. They have to produce quarterlies, which is But if there's anyone listening at all, or anyone listening from overseas, Australian companies don't report quarterly unless they have to, and they have to because they're not yet cash flow positive. So they're always putting out quarterly updates. There'll be one this month because October is a quarterly update for the September quarter. So he's very good with communication about what's going on with the company. And he seems just, again, just judging by the interviews, a few things he said is that he seems very focused on not going out. In previous interviews, he said things about, look, we've only raised X amount of capital and, we don't actually need any right now and we don't plan to raise any. So that's sort of reassuring from my perspective. Yeah. Pointera.
Okay. Sounds good.
All right. So I think that brings us to the end of this funky podcast. Any last words, Tim? Anything on your mind? Any more salt to expunge from the system? No.
Not till next week.
There's plenty of time to accumulate some more salt between now and then. So let's sign off. We'll say farewell to the audience, and we'll see you next week.